Nigeria's central bank has taken an aggressive stance to check the current forex crisis and galloping inflation in the country. After its much-anticipated Monetary Policy Committee meeting on Tuesday in Abuja, CBN Governor Cardoso announced a massive hike in benchmark lending rate by 400 basis points to 22.75%. Cash reserve ratio was also raised to 45%. It's the first massive hike in the rates in the history of the Apex Bank and clearly highlights the economic challenge Africa's largest economy is currently grappling with. This next report has more on the story. The 293rd Monetary Policy Committee meeting, chaired by CBN Governor Cardoso, is the first since he assumed office in September 2023, and the entire business community in Nigeria has been waiting to see how the central bank responds to the rising inflation and forex challenge confronting the country.
1. Raise the MPR by 400 basis points to 22.75%. from 18.75%. Adjust the asymmetric corridor around the MPR to plus 100 to minus 700 from plus 100 to minus 300 basis points. Raise the cash reserve ratio from 32.5% to 45%. Retain the liquidity ratio at 30%.
It's a massive hike in the benchmark lending rate, but the CBN governor made it clear the move is necessary, considering the magnitude of the economic challenge the country is battling.
Was centered on the current inflationary and exchange rate pressures, projected inflation, and rising inflation expectations. Members were concerned about the persistent rise in the level of inflation and emphasized the committee's commitment to reverse the trend as the balance of risk leaned towards rising inflation. The committee, however, acknowledged the trade-off between the pursuit of output growth and taming inflation, but was convinced that an enduring output expansion is possible only in an environment of low and stable inflation.
But some experts are quick to point out the implication of the massive hike in MPR.
Businesses will pay more for loan, and those that have already collected loan, they have to pay high interest rate on those loans. And again, the cost of some of the goods will go up because the businesses will transfer some of those costs to their consumers. And again, now businesses may suffer low patronage because a lot of Nigerians are not earning much to even be able to buy some of this product.
Increasing monetary policy rate now, MPR, in order to bring down inflation, may be counterproductive to inflation itself. Recall that we have been increasing monetary policy rate from 11%. We increased it to an all-time rate, and it's still been unable to curtail the stubborn inflation like an STI infection.
Nigeria's inflation is nearly at 30%, which is a record. The local currency, the Naira, has lost about 100% of its value in the last 2 months. The CBN has thrown a raft of measures at the problem. The hike in benchmark lending rates is the latest effort in the Apex Bank's battle to bring down inflation and fix the forex challenge.
We are moving to a very aggressive regulatory environment where those policies have been coming out, as you can see, and tolerance for people not to abide by the regulations that are coming out and to comply is zero. People will have to abide by those regulations.
The next meeting of the MPC is scheduled for 25th and 26th of March 2024. The CBN will be hoping some of its policies will begin to bear positive results. But it's been quick to warn that there is no quick fix to the country's current economic challenge. Okpayemi Owoseni, TV360 News, Lagos.